what is the impact of decrease in repo rate or bank rate by the central bank, that is the Reserve Bank of India, in the economy? That is, what impact it has on deflation, what impact it has on price rise or decrease in prices, what impact it has on cost of borrowings, what impact it will have on commercial banks. We'll be learning it. So what impact it has, what impact the decrease in repo rate or bank rate. Repo rate is the rate at which the commercial banks borrow money from the central bank for short-term credit. That is repo rate. Repo rate is the rate at which the commercial banks borrow money from the central bank for short term. And what is bank rate? Bank rate is the rate at which the commercial banks borrow from the central bank RBI for long term. So repo rate is for short term and bank rate is for long term, but the impact is same. When repo rate or bank rate decreases, what happens? As a result of decrease in bank rate or repo rate, the rate of borrowings by commercial banks from the central bank will come down. So it will come down. As a result, the cost of borrowings of commercial banks will come down. Hence, the lending rates by the commercial banks to firms and households will come down. At what rate they give the interest rates of the commercial banks will come down. So borrowings will be encouraged. Firms will borrow more money for investment purposes. Households will borrow more money for buying household goods such as refrigerators, cars, TVs, micro ovens, computers, laptops, and mobile phones. As a result, what happens? There will be more money supply in the economy. Because of the increase in demand for goods and services, the price of goods will go up. And the firms will produce more goods and services. We can decrease deflation in the economy and we can control deflationary gap. I repeat, when bank rate or repo rate is decreased, automatically the commercial banks borrow more money from the central bank at low rate of interest. And they also decrease the rate of interest to the firms and households. As a result, demand for goods and services in the economy will go up. More borrowings will take place, more supply in the economy, demand for goods and services will go up, and deflation is decreased, prices will come down, firms will produce more goods and services.